It's 2026 and it's late at night. The house is quiet, the dishes are done, and you're sitting with your phone lighting up your face in the dark. You open your banking app the way some people check the weather, not because something is wrong, but because you need to know where you stand. You make $80,000 a year. That number once lived in your imagination as stability. In college, it sounded like adulthood unlocked. When you were younger, you told yourself, if I can just make around 80K, I'll be fine. And now you're here, and you are fine, but you're not free. The deposits hit your account like clockwork. So do the withdrawals. Rent or a mortgage, car payment, insurance, utilities, groceries that seem to climb every quarter, subscriptions you barely notice but never cancel, retirement contributions that feel responsible but small. You scroll through the list and nothing looks reckless. Nothing screams luxury. It's just life. Yet somehow life consumes nearly all of it. That's the 80K survival problem in 2026. It's not about being broke in the traditional sense. It's about earning enough to function but not enough to feel insulated. It's the tension of living in the middle, where you're above crisis but below comfort. You can pay your bills, but one real emergency would rearrange your entire year. And that subtle vulnerability shapes your behavior more than you realize. Because money is not just numbers, it's perceived safety. It's how far you are from panic. When most of your income is already committed before you earn it, your brain doesn't register wealth. It registers responsibility. It registers maintenance. Housing alone has redefined what normal costs. In many cities, safe neighborhoods and decent apartments demand a third or more of your income. That choice isn't about status, it's about security. You don't want to feel unsafe. You don't want a brutal commute, so you stretch slightly. Then there's transportation. Reliable cars aren't cheap anymore, and repairs cost more than they used to. Groceries creep upward quietly. Healthcare premiums renew higher than expected. None of these expenses feel extravagant. They feel adult, necessary, responsible. But responsibility at scale is heavy. And here's where psychology tightens the knot. When you first began earning real money, every upgrade felt meaningful. You replaced old furniture. You bought clothes that fit better. You moved into a space that didn't feel temporary. You stopped checking every single price tag. Those weren't ego decisions, they were growth decisions. You were building a life that matched your effort. But humans adapt quickly. What once felt like progress becomes baseline. That better apartment becomes standard. That reliable car becomes expected. Those occasional dinners become routine. Your nervous system resets, and once something becomes your standard, downgrading feels like loss. So your expenses don't feel like upgrades anymore, they feel like requirements. And when requirements expand to match income, margin disappears. Margin is the invisible ingredient that makes people feel rich, not income, margin. The gap between what you earn and what you must spend to maintain your identity and obligations. At 80K in 2026, for many people that gap is thin. Thin gaps create tension. Tension creates caution. You hesitate before booking trips. You delay big purchases even when they're reasonable. You tell yourself you'll invest more aggressively later when things calm down. But things rarely calm down. Modern life isn't designed to calm down. It's designed to scale. Social comparison intensifies this. You don't compare yourself to celebrities. You compare yourself to peers, people in similar jobs, similar cities, similar ages. You scroll past photos of weekend getaways, newly renovated kitchens, new cars with subtle upgrades. It's not flashy wealth, it's slightly elevated normal. And that slight elevation becomes the new benchmark. So you stretch a little, upgrade a little, finance instead of waiting. Because belonging matters. Humans are tribal. We calibrate our expectations based on the group. And in 2026, the cost of belonging has increased. At the same time, the economy feels less certain. Automation shifts roles. Companies restructure quickly. Layoffs spread through social feeds faster than rumors. Even if your job feels secure, you've seen enough volatility to know stability isn't guaranteed. So your income doesn't feel permanent. It feels conditional. And conditional income doesn't create deep confidence. It creates cautious optimism. You're fine as long as everything continues, but as long as is not the same as freedom. That's the emotional weight of the 80K survival problem. You are sustaining a lifestyle that depends entirely on continued performance. If you stop, the machine slows. If the machine slows, your obligations don't. and that imbalance sits quietly in the back of your mind. The deeper issue isn't that 80K is low. In many parts of the world, it would feel extraordinary. The deeper issue is structural. Modern expenses are sticky. Once you adopt them, they rarely shrink naturally, and income, while higher than average, often rises slower than the cost of comfort, so each year feels like running to stay in place. The dangerous belief is that the solution is simply earning more, but if your lifestyle scales with every raise, the feeling won't change. 90K becomes the new 80K, 100K becomes the new baseline. The treadmill speeds up. What doesn't automatically increase is flexibility. Flexibility is what allows you to take risks, change careers, rest, or walk away from something misaligned. And flexibility is built from margin and assets, not salary alone. Many people at 80K are living well, but not building aggressively. Investments happen, but slowly. Savings exist, but not enough to alter behavior. Debt shrinks, but gradually. So each month feels like a reset instead of acceleration. That's survival in a modern form. You're not sinking, but you're not gaining altitude either. The perspective shift comes when you realize the real goal was never the number itself. The goal was control. Control over your time, control over your stress, control over how dependent you are on a single paycheck. When you focus only on hitting income milestones without redesigning your cost structure, you achieve status without security. The people who feel calm at similar income levels often made different structural choices. They resisted constant lifestyle upgrades. They kept fixed costs lower than their ego wanted. They invested consistently, even when it felt slow. They valued optionality over appearance, and optionality is power. The 80K survival problem is ultimately a design problem, not a personal failure, not a moral weakness, a design problem. A mismatch between modern expectations and sustainable structure. Once you see that, the question changes. Instead of asking, why doesn't 80K feel like enough, you start asking, what would make it enough? Would fewer fixed obligations change how you breathe? Would higher savings relative to expenses change how boldly you think? Would separating identity from consumption reduce pressure? Because wealth isn't a salary, it's the distance between you and fear. And in 2026, that distance doesn't automatically appear at 80K. It has to be built intentionally. When you stop chasing income as the sole solution and start designing for resilience, something shifts. The number stops defining you. The structure does.